Kouky, how you going?
I'm good, thanks, mate.
So, I'll just quickly give you a little bit of background on Kouky. So, Joel just did a good job, but Kouky and I go back to the days when I think you were economics editor or something like that at AFR.
At the Fin Review, yes.
Yes. And used to call the Fin Review in those days, now the AFR, and I'd say that's probably about 2002, 2000.
About that, yeah.
That territory. I was a wizard in those days, and Stephen, I call him Kouky, but Kouky then got me somehow I did a couple of Australian Economic Forum debates. I remember I did one with, what's his name from the Herald?
Ross Gittins.
Ross Gittins, and I turned up and I was arguing something. I think I was in the affirmative about house prices or something like that, and Ross, of course, is always in the negative. So, and Ross, I turned up in like a suit in those days. Everyone wore a suit. It's quite a big a forum full of economists, and Ross Gittins turned up in a suit with a pair of sand shoes.
Dunlop volleys.
Yeah, I couldn't. What the hell? We go back a long way. We've known some pretty weird economists and pretty weird views out there. He's mad on X. Follow him on X, but don't hold him to his political views on X, because on X he's different. He's quite nearly militant Labor on X.
I'm out there to make a point,
but he does it to stir reactions. So he's not on X to me, and he's not the way we do our monthly or 6 weekly podcasts for YBR on the Australian economy and what's going to happen with interest rates. And today is going to be effectively a live podcast.
Yeah, before we get into the nitty gritty of economics and all the rest of it and interest rates, and sort of even regardless of the election result, you've got to take a step back sometimes and think, isn't Australia great? We can have an election and maybe your side didn't win or they did win, and we're sort of still here functioning normally. And I view it a little bit like the footy team. So you support South, I support South, you support the Roosters.
Can you believe that? We meet every 6 weeks or two.
and so just because your team wins and loses doesn't mean you're enemies. So you can disagree on really important things, and they do matter to you. I'm not saying don't have a passion about politics and economics and all these other things. But at the end of the day, we're all in this together. Australia's a pretty bloody good place, and YBR's a really good place to be part of.
Thanks, Kouky. And that probably is a good place to start. So, I was talking to someone the other day, and this particular individual, like a super wealthy guy, very liberal, he's he just can't get out of his head that Labor won and won so well. And I said to him, I said, mate, you've got to get over it, because irrespective of what your view on the world is, Labor won. And not only that, they won with a mandate.
Yep.
So you've got to work within that environment. You're not going to change anything. You can carry on and bitch and moan, whatever, but it's not going to do anything. Yep. And all you're going to do is sort of put a burden on yourself. So we all need to understand, what does it mean for our business? House prices, largely, demand for houses, secondly, and affordability, which is interest rates. So I might kick it off there, Kouky. What do you think Labor's win means for our market? House prices, demand for houses, let's call it supply of houses too,
sure.
And just to be economic, and also interest rates.
Yeah, look, there's a couple of things that, in a way, Labor being re-elected is business as usual. We knew what they did, and again, even if you disagreed with a few little things, it's not catastrophic, if you know what I mean. Yeah, and in terms of the economy, and a lot of what they're proposing in economic terms, but certainly for the housing market, is all, dare I say it, and I don't mean to be too much like an economist, but long-run issues. Like if they've got this plan to build more houses, they've got a plan to allow people to have a 5% deposit before they tap into the market for the first home.
Without loan mortgage insurance.
Without loan mortgage insurance, correct. So they're effectively funding the loan mortgage insurance.
Yep. They're guaranteeing it.
Correct. So there's a few things like that are happening. And when we heard Jim Chalmers, and by the way, that was a great interview with both Chalmers and Angus Taylor, the Shadow Treasurer, that you did in your podcast.
I think Jim outshone him though.
But it was still good to hear, some of those things, to hear about the person is really important.
Yeah.
But Jim, sort of when he had an interview on, Monday after the election, was pretty sober, if you know what I mean. And by that I mean, he said, look, we won, we're happy about that, but now we're getting on with the job, and one of the critical things that he's going to focus on, and look, whether he's true to his word, we'll wait and see. I suspect he will be. But one of the issues that's dogged our economy for a decade, maybe even longer, is our absolutely appalling productivity.
Can you explain what we mean by productivity?
Productivity, yes.
And measurement of.
Yeah, because productivity it goes over most people's head, including mine, by the way. But it's basically producing more output, growing your economy faster with the same number of people working. So one example can be you use machinery to do something. So if you think about, I don't know, someone digging a hole, the foundations for a house with a pick and shovel, take you a long time. Productivity is pretty bad. You give them a digger, a big digger machine, they can do it in a day. So productivity is linked to sort of capital investment. It's linked to things like the government getting the right infrastructure so we don't run into these, congestion and all these other things which are really a drain on the economy. You're sitting there in this bloody traffic or sitting on a train that's slow and all these other things. So enhancing that sort of infrastructure is really, really important part of it. Skills and training, I think that in all the conversations I've had in recent years for any business, not just this type of business, but other retailers or IT businesses, whatever, it always comes up skill shortages. I've got a great business idea. I want to invest some money. I need to hire more people. Damn it, I can't find them. So that business thing is shelved, and so productivity, the output of the economy is lowered. And for an economist, that's really bad. I want the economy to grow. I want everybody to be better off in 2 years' time than they are today. And you do that through that productivity.
And how do we? Where can people access how productivity is measured?
Yeah, it's in the Bureau of Statistics, our good mates who produce almost all the data on the Australian economy, abs.gov.au. You can see its output per person working. And so if we've got a 1% increase in employment in a particular year, just normal growth, and GDP, the output of the economy, is 2%, then we've got a 1% lift in productivity by that measure. And that's sort of been negative, not just flat, but it's negative. So we're actually being less efficient. And that's what's causing, this might be a way to sort of talk about the RBA in a sense. I know we'll talk about it a whole lot more a bit later. But that's one thing that the RBA has been reluctant to cut interest rates as aggressively as most other countries, because they're thinking that, well, if our productivity is bad, what that means is how businesses maintain their profits is putting up their prices. What's putting up your prices? It's inflation. Because they're not getting that. And the beneficiaries of productivity are both the business and the worker. So the business gets bigger profits, great. The worker gets a reasonable pay rise, so they're happy. And so that's what productivity is all about.
Could we just pick it apart though a little bit? So on that example you just gave, and you did make the point that productivity in Australia has been at its lowest for probably 20 odd years.
Even longer, Mark. I think we've got to go back to 50 years or something.
Okay, so you mentioned that if employment grows by 1% and GDP grows by 2%, then productivity effectively is 1%.
About 1%, yes.
So what would be considered a good productivity level? What's a fair, reasonable amount? And importantly, what is the budget process when they build their budgets? What are they looking for in terms of productivity in their assumptions?
They put, it sounds like a really minute little change, but they look for about 1.25% annual productivity growth. The difference between 1 and 1.25, you might think, gee, that's pretty Mickey Mouse, it's pretty chicken feed. But it is actually, when you compound that over the course of 5 years, productivity 1 year can go up or down, so don't worry about 1 year. It's that long run trend that's important. The budget numbers which came out in March when Chalmers delivered his budget before the election assumed productivity of 1.25. And a number of people noted that might be a heroic assumption because for the last 10 years it's been basically zero. So the Treasury, in preparing the budget numbers, looking forward to a rebound in that productivity. So employment, we want people to get a job, great, low unemployment, love it, but we need the economy to grow faster. We need to take away the impediments. The other thing about productivity is tax policy, and that thorny issue, because we've just had an election campaign and the tax debate, to be blunt, well, it didn't even exist. The Labor Party's giving tiny little tax cuts in a year or two. The Libs were promising 25 cents off a litre of petrol. That's not tax reform. Neither of those. We need to actually have and a few of us last night over a beer were having a chat about what we do. But the tax reform issue is really about you know, collecting money from taxpayers at a level that's not really an impediment to them doing business and hiring workers, to collect enough revenue, because the other thing about tax policy, so why does the government want to collect tax? We, the electorate, you and me, all of us who voted last weekend, we want the government to give a decent healthcare system. We want them to look after our ageing parents in an aged care facility. We want to drive on good roads. We want to make sure our defence department's equipped to protect us, So the government does have a lot of spending, and sure, they can be trimmed and they can be spent more efficiently. Don't get me wrong. I'm not saying that every dollar that the government spends is perfectly spent. Far from it. But there's a core element of what the government provides us that the private sector wouldn't provide. Like, the private sector can't give us a defence force. We need the government to fund that. So the tax has got to come from somewhere. But the tax system right now, with the GST only at 10%, what have we got? The company tax rate, 30 or 25, depending how big you are. The top marginal income tax rate was 47.
47.
47. They're high. It'd be nice to lower them to get a bit more competitiveness in the economy. But if you're giving those tax cuts, where's the money coming from? So you don't run a massive budget deficit, so you can fund government services.
So you need more productivity.
Productivity gives you that yield. Yeah, it gives you that, I won't call it a windfall gain, it gives you that extra cream on the cake sort of thing. Yeah.
So if you look at our productivity, one of the reasons it's been so low is largely not so much because of the unemployment number, or the employment number, I should say. It's largely because of the GDP number.
Yes.
Because our denominator
employment's actually pretty good. Employment's actually quite good.
So I'm saying employment.
So we're not producing enough. Yes. Correct.
Yeah. So if employment's good, in other words, unemployment's quite low, therefore employment by definition is pretty good.
Yep.
Everybody's sort of employed, irrespective of the fact that we had a massive amount of people coming into the country. So like something as good's happened there. That's a good thing. Yep. But therefore our GDP's low. Maybe you could explain, why do you think GDP is low then? So what is it that's, because we know that X and M, we'll quickly just explain, GDP is the addition, we use the expenditure method, so GDP is the addition of, well, I'll leave it to you, just take through.
The output in the economy in any given year, GDP, economic growth, it's consumption. So you and me, when we go to the shops, when we buy...
Household consumption,
buying groceries, buying insurance policies and whatever. Government consumption.
Plus
government consumption. Plus investment. So when you buy a computer, a new laptop, a machine, when BHP or Rio buy these massive mining plant and equipment, that's I for investment. C plus I.
Plus
X, exports, because if we export stuff, minus imports, because we're paying someone else because they made it. So that's basically what GDP...
So we've been going all right on the X minus M.
Exports, we're doing fine, yes. We're exporting a lot, importing not so much, so we're doing really well on that.
Correct.
And the G, government spending, is where there's been strength. It is the private sector...
Can we just go back on government, though? We're talking about federal, state and council. With all the government expenditure. So every state government...
Yep.
So what they do... They actually don't do this, but they sort of in a quantitative sense, they have... a process that gives them a confidence level, 95% confidence level, that the data that they do gather every month, every week, every day, they do it, a whole lot of different ways, but it's not actual data. Well, it is actual data, but it's sort of representative data of the total population. So, but they include all government expenditure. So government expenditure, as Kouky just said, has been quite high, very strong.
Extremely high.
Very strong.
It rose during the pandemic, and for obvious reasons and good reasons. It kept our economy going well. So good old Josh, I've mentioned to him, well done on how he managed the COVID pandemic. There was a bit of a pullback because JobKeeper and JobSeeker did end. They weren't there forever. So we had that big pullback in spending, and it came back down. And in the last couple of years, it's gone back up. Not quite to the peak that we were during the pandemic, but it's gone back up. And a couple of things have driven that. At the state and local level, they've felt a need to ramp up infrastructure, which is not necessarily a bad thing. As I said before, infrastructure is really good. I want good transport systems, good, the whole economy needs to function well. But they're doing it, and it's really, really expensive. So that component's been part of that increase. And the federal government, as part of, they kept to their promise from the 2022 election. They said they're going to provide a nurse in every aged care facility 24 hours a day, 7 days a week. That required a lot of government spending. Aged care, health care, education, things like that, which are public service jobs, even police force, things that we think, I'm glad the government's spending a bit of money on those things. I am. Now, again, what do you want to cut if you want to get that down? But for the moment, the government spending is quite high. So I think we're going to be looking at, again, the new government. Let's talk about them. Whether you like it or not, they're the government for the next 3 years. I think genuinely they're going to be, apart from that productivity idea, they're going to be looking at these numbers. They know that what's happening. They're not silly. They're going to say, well, hang on. And Standard & Poor's, the credit rating agencies, came out a week or two ago and said, oh, look, we might have to downgrade Australia's AAA credit rating, which does matter, by the way. We can talk about that later. They said, oh, look, the budget position in Australia is it's okay, but just watch out. It's one of these ones, it's a little bit of an amber light flashing. So I think, given the mandate that the Labor Party got, if I was advising them, I'd be saying, look, in the next couple of months, have a little bit of a look at how you can trim a few bucks here and maybe just adjust a few policies to make sure that the budget deficit, which I think in current estimates about 35 billion, something like that, just trim a bit of it off. So again, that's going to, where they trim, just to make sure that government spending trajectory just tapers back a little bit.
Because if we just pull it back to
take some pressure off the economy.
Because we actually have conflict here. So on the one hand, we're trying to increase GDP. Governments would like to see GDP, the measurement of output and our productivity in the country to be increased, so that we can look like so that we can sort of prove to ourselves we're being more productive when, based on what Stephen just said, productivity minus GDP minus employment growth. Yep. Because governments like to get a gold tick like everybody. They all want to be, liked, like everybody in the world, I guess, these days. But on the other hand, the reason for that, they want that government expenditure to increase, is because at the moment they can't rely on household consumption.
Yes.
Because household consumption is down. And the reason, you all know the reason household consumption is down, because interest rates are up. So, we've got the Reserve Bank saying, I'm going to keep interest rates up because I don't want people to spend too much, because when they spend too much, they tend to encourage vendors to put prices up. So we've got the Reserve Bank sort of in conflict a little bit here.
It is.
But at the same time, the Reserve Bank would like to see productivity up as well, or the measure of productivity up. And the government's saying, well, the only way we can do it, because you're putting interest rates up and you're keeping household consumption down, tell me if I'm right or wrong here, therefore we, the government, have to push government expenditure up to make sure we build a nice platform for everybody to be more efficient and have a better outcome, be much more productive. That's the conflict.
No, that's a lovely summary. That is not a dilemma, but that is the fact.
But it's an economic dilemma.
Just look at the numbers. Again, my job is looking at numbers. And government demands up, and it's private sector and us householders, you and me, in the household budgets that we do every day when we sort of earn our pay and then go and spend a bit of it. That's been the drag on the economy. That we consumers, we're not dumb. We're smart. We know when our finances are under pressure. We know that when the inflation rate hit 8% 2 years ago, that the cost of living issues, and our wages are only going up at 2% or thereabouts, you're thinking, oh my God, that's a real stretch on the budget. Then along came these interest rate hikes from 2022 through to end of 2023. My God, so even if you had a relatively modest mortgage, let alone the folks who had a really big mortgage, we had, 350, 400 basis points of rate hikes passed on to mortgage holders. So not only every day that you pay your insurance...
1/3 of the economy.
Sorry?
1/3 of individuals in Australia.
Correct. So not only were you paying more for your wheat bix and your insurance premiums and, all of that stuff that you buy, essentials. So they're not really luxury goods. You're not buying Grange or Dom Perignon, you're just buying the essentials that you need. Then your mortgage repayments go up by, in many instances, a couple of $1,000 a month. Some or more, but, going up by a lot of money. And if you've got a constraint on your income, like you just got a regular job, 2% pay rise, whatever, what do? You cut your spending elsewhere. So you maybe don't have the holiday. Oh, I need a new car, but I'll wait a year or two before I buy one. This'll do. So that's caused the consumption, spending from the household sector to go down, and that's where the drag in the economy has been for the last couple of years.
So given that there's a conflict between,
it is.
the RBA and what governments are doing, and I'm not saying Labor or Liberal, just what governments are doing, it doesn't really matter because it's happening at state levels, etc. It's not just at the federal level. It's all government expenditure. Given there's this conflict, does Jim Chalmers go along to the RBA and say, listen, let's just sit down and have a chat? Look, on one hand, we want to get a good GDP outcome. We want to see a good... Right now, you're killing the economy with the high interest rates.
Yeah.
This is sort of the Donald Trump argument when he has a go at Jerome Powell. Yeah. This is why, because people think Trump's mad. They think, well, you can't be saying I'm going to sack Jerome Powell and, rip into the Federal Reserve guy in America. It would never happen anywhere else in the world. But Trump's point is, look, dude, we need to work together on this stuff. Now, would Jim Chalmers go and sit and have a cup of tea in a Leamington with, I
think Zovo is actually...
It is Zovo, and sit down there with the governor, the Reserve Bank governor, and just say, how do we work this? Maybe... Because where I want to take this, Kouky, to is another level. And you and I have discussed a million times over. We're talking about tax reform. So instead of the Reserve Bank just ripping into the borrowers and putting interest rates up, maybe if they said, look, Reserve Bank, you don't need to put interest rates up at the moment. In fact, you can reduce them. But what I'm going to do as the Treasurer, I'm going to increase GST so that everyone's affected.
Yeah.
Now, can we just talk about that for a second? Like, how do they do this shit, or do they just stay apart and don't talk?
They talk.
They do talk.
And the interesting thing, and I think it's actually not a bad idea, that the Treasury Secretary, the guy who advises Jim Chalmers as the Treasurer,
Stephen Kennedy,
is on the RBA board. And there are 9 board members and...
This new board.
The new board. The Governor, the Deputy Governor, Stephen Kennedy and a whole lot of other academics, business people and a whole lot of other union people. So they do talk, and I think that it's not quite as direct as you said.
Well, it's not Trumpian.
No, as much as it possibly could be.
Yeah.
But if Stephen Kennedy or the Treasurer, on the phone to Michelle Bullock, RBA Governor, hey, Michelle, I'm about to have a budget that's going to be trimming some spending. I'm going to take a bit of pressure off that growth in public sector spending that we've been talking about and she's been talking about.
Which will drop GDP.
Which will take a 0.5% or whatever off GDP, 0.25% or something like that. He won't then say, I think you should cut interest rates because they're independent. But the message is, well, if the government sector is pulling back from the economy and the problem of economic growth for the last couple of years has been private sector, households who are hurting under the interest rate burden, if we can call it that, she'll put 2 and 2 together pretty obviously and say, well, yeah, I can, with inflation in the target band, hooray, that's good news. With the economy pretty soft, government sector pulling back, I can afford to trim rates to get the private sector spending again, investing again, and continuing to hire people so the unemployment rate doesn't go up too much.
So let's talk about the next interest rate move.
Yeah.
So Steve used to have this... back in the AFR days. I used to love it. Like, he used to have this graph, and he would, every month before the RBA met, like literally a few days before, probably, I can't remember if it was the Friday before the Tuesday, something like that. I don't know if you remember. But
I can't remember, no.
But I remember it really well because I used to text him and stuff about it. And but he would have a little predictor. And it sounds really commonplace and trite, the little graph, but actually they're the sort of things they're looking for. So maybe you can let's just do the top 3 of them. So let's just look at inflation first.
Yeah. It's a checklist of what the RBA board look at. Yeah, so you're on the RBA board and you might think, well, what do they look at when they're considering whether to put rates up, down or leave them steady? Because they're the only 3 options. Or whether it's 25 or 50 or we'll see what happens there. But basically there are 3 key areas. There's a couple of other little areas that they look at too.
There's about a dozen other areas, but...
But inflation is the premium one. Their mandate, the RBA governor and the RBA board for more than 30 years.
1996.
Pete Costello... it was 96.
96,
so 29 years. Costello implemented the inflation target between 2% and 3%. they do allow for a little bit of variation. So if there's a flood and it causes lettuce prices to go up, look, we're not going to hike interest rates because lettuce prices went up because of a flood, you know. So there's a little deviation that they can have. But in a broad sense, if inflation is between 2 and 3, we're happy. Put it this way, if it's above 3, we need to hike. If it's below 2, we need to cut. And so that's where all the rate hikes from the last 2 years have been, because inflation was, well, putting aside the pandemic, inflation was about 1.5% or 2% just before the pandemic. Okay, all bets off during the pandemic for obvious reasons. Post-pandemic, oh my God, inflation went to 8%, hike. And so they kept hiking until now we've got inflation back in target. So inflation is the critical issue for them. The other one is unemployment. And, well, to his credit, and I think it was a good reform, Jim Chalmers reformed the RBA about 18 months ago. And put unemployment or the labour market as one of their other mandates. So it's a dual mandate. So inflation is still clearly the most important one, but don't forget unemployment.
And that, by the way, that probably is one of the biggest structural changes that the RBA has to deal with, apart from having a new RBA bill, but that they've had to deal with since the 90s. So
yes,
1996,
it's a big reform. Yeah.
So 96 when they
96 was huge.
Yeah, that was a big deal.
Yep.
But the next big deal was Jim Chalmers. He got an independent report, if you guys remember, a review, I should say, of the RBA, and you call it independent, but these things are never independent. You already get told what the outcome needs to be before you start the review.
You're independent, but this is what the answer is.
I've done 2 reviews of different things, and I was told by the Prime Minister both times. One was Joe Hockey, who was Treasurer, and the next time was Morrison. What outcome they wanted me to deliver before I started my review, and I chose my panel, my task force. So, and that's pretty normal, but it doesn't matter. The review, the big and most of us forgotten about it, but the big structural reform last year, in August, September, I think it was announced August, September, I think. Maybe I've
lost track of my dates.
Yeah, me too.
But
it was from now on, RBA governor, you've got to consider not only CPI, which was implemented by Costello in 96, but you now have to look at unemployment.
Correct. And don't ignore the labour market, the unemployment rate, when you're deliberating on interest rates.
Well, it's not unemployment, it's employment.
It's employment,
It's full emploment, so they're different words.
Mark, you're not going to open up Nauru, are you?
No, but we won't talk about Nauru, but they have to consider the country is fully employed.
Yes.
Now, the question is, we don't know, how did we work that out? Because there's some people don't want a job, some people between jobs, some people only want part-time jobs. It's pretty crazy. So the way you measure that is you looking at unemployment.
You do, and you look at the labour market as a whole.
Yeah.
And so this is this question. So why that move, and you said it is a big change in the RBA.
It's a structural change.
Modus operandi. So if inflation, just say, stays at 2.8, just assuming for a second. So not quite in the middle of the band. They want it in the middle. So while it's in the band, they prefer it in the middle of the band. And again, these decimal points can actually mean a lot when you're talking about inflation. Now, if the unemployment rate were to go from currently 4.1 to 4.3 to 4.5, and the unemployment rate kept going up because the economy remained slow for a little bit longer, and inflation was just a touch higher than they'd like it, they would probably still be cutting interest rates because the unemployment rate was going up. So it's never been tested because it hasn't been in place for long enough but if the inflation rate was stuck at 3%, so right at the top of the band, and the unemployment rate went up, what would they do? My hunch under the new mandate is they'd still cut rates.
Yep.
So even if the inflation rate was not quite as low as they wanted it, and the unemployment rate was going up, they'd say, okay, we've got a dual mandate. I'm not quite happy with our inflation outlook. We're certainly not happy with the unemployment outlook, but we'll still cut.
So this is an important point for everybody to take in when you're reading the numbers that come out from the ABS, and this sort of stuff gets published all the time. And if you want to find out when the next set of data comes out, just go to abs.gov.au and you'll find out. It's pretty easy.
Yep.
And it's actually quite intuitive the way, it's easy to read. It's actually I reckon it's excellent.
Very good website, yes.
Very good. So if you see, oh, wow, the marketplace goes mental, all the commentators start talking about it, including him and I. Oh, inflation's, trim mean is, we'll come back to that, but trim mean inflation is like 2.5. But if for some reason unemployment was 3%,
yes,
you're not going to get a rate reduction.
No.
So these two bits of data are neck and neck. Not one ahead of the other, they are neck and neck.
And the really interesting...
And that's what worries me too, Steve, because unemployment has been stubbornly, in a good way,
low.
4.1.
4.1. 4.1 every month for the last year, basically.
And if this new Labor Party, like initiative and all the sort of momentum that goes with it, and employers start to feel really good, and they say, shit, everything's good, everything's like ticking along nicely, the inflation number's good, I'm going to start employing people. If the unemployment number drops below 4, my own gut reaction, my own feeling, my own gut instinct says that the RBA is not going to reduce rates.
Correct. So turning that argument on its head, so even with nice and low inflation, just say we had 2.2 trimmed mean headline inflation rate, and because of a pickup in our economy for some reason, it might be a China-inspired lift in activity or something, and the unemployment rate went back to 3.5%, even 3.75%, 3 point something, the RBA would say, oh, gee, not that they don't want low unemployment, don't get me wrong, but we know from history that when the unemployment rate gets too low...
What happens?
Wages go up.
And we get what we call wage push.
Inflation. Now, that hasn't happened for many years despite fears of it happening, but the theory still holds. It still holds in practice. When you think about it, I don't know whether any of you experienced this during the labour market shortage, the skill shortage, whether you're looking to hire people and think, I can't find anybody, because a lot of other firms did. How do you, just say you desperately need someone to work. The business is running really well, you're really happy, I need to find someone, put the ad on Seek or however you do your advertising, no one applies, or one person applies. Or you find someone and they're really good, but they say, actually, mate, I want 20% more than you're offering me in terms of the pay rate, and you're hamstrung because there's no other alternative. You need that worker. So what happens to wages? They go up because you paid that extra 20%, just in this example. And then so you've got this situation where that can and often is passed on in higher prices. So if you're a business person, your main costs are your operational costs, your labour costs and your mortgage costs. So if labour costs are going up, how do you maintain your margin? I put up my selling prices. What's putting up selling prices? It's higher inflation, the thing that the RBA is fighting against.
But now, whilst we're not suggesting the RBA will be worried about it, but they will be considering it. So inflation and unemployment are two numbers you need to get your head around. The target is between 2 and 3 on inflation, which goes back to 1996, which is, and by the way, what's really interesting, from 1996 to 2022 probably, that's like 26 years or something, we actually had an average CPI or inflation between 2 and 3.
It was 2, if you actually do the average, guess what? 2.5, in fact, to 2 decimal points. Believe it or not, this sort of blew me away when I actually did.
I saw it.
It was 2.49.
Yeah, it was amazing.
How bloody good is that? I wish I could target anything that well.
And Australia as an economy is blessed.
And there were fluctuations, but when the economy was a bit strong, it went a bit higher, and then it went a bit lower. But the average, as I said, lettuce prices or oil prices, something happens in the Middle East, they go up and down. The RBA does not worry about that terribly much because they know it's probably not going to be embedded.
It's inflation in the medium term, whatever we call it. That's the word that they use. And we've done a remarkable job. Australia is like a gold standard in relation to CPI over the last 25 years. Like it's one of the best performing countries in the world, and you have to give the RBA a rap for that. I mean, and like they deserve it, irrespective of some of the utterings of our last RBA governor. It doesn't matter. Each one of them has done a bloody great job, and it goes back to Costello's original 2 to 3%, and the way that was mandated into the RBA at the time. But we now have a structural change. We have something else mandated, and it doesn't surprise us that the Labor Party would push unemployment. That makes sense, and probably should do it. They should do, or employment, I should say. So when you're looking at stuff, don't get too carried away with just the inflation number. Keep going back to the ABS and have a look at what the unemployment number is to get a sense of things. Just before we move off unemployment, because that's Stephen's second thing you need to tick off your list. So CPI, inflation, unemployment. Before we move off that onto the third one, before we move off that, I will we tickled it a little bit a moment ago, Kouky. There is this concept, I don't know if it's changed recently, called the non-accelerating inflation rate of unemployment. Now, it's a mathematical concept, a quantitative concept, but nonetheless, it's a model, okay? But it is an important model because the RBA does these models, Now, I don't know whether you found out more recently, but I haven't seen her change the modelling that they did some time ago. They would obviously have done a remodel, but I haven't seen the outcomes. They published one about 12 months ago.
I haven't seen an updated public one. I'm sure that's one that they work on all the time.
Yeah, they'd be updating this model, but the Nairu they have internally in the Reserve Bank. So the Reserve Bank's looking at this Nairu. Basically what it is, it's a rate of inflation, a rate of unemployment, I should say, that they take the view will neither accelerate nor deflate inflation. So it's the Goldilocks point of unemployment. What is the employment rate we'd like to see in this country that is like the perfect position? Now,
it doesn't add to wage growth and inflation.
It does no pressure.
From wage growth.
It's perfectly positioned. But it's like we all know.
It's a fantasy, but it's an important concept.
Yeah, it's an economic fiction. Yeah. By the way, all this stuff's economic fiction. True, I'm sorry, mate, but everything we're talking about is all bullshit, okay? But a bit like the fact that Labor won, if you don't like that, that's bullshit too, because Labor's here and Labor's here to stay. And all these economic...
Like it or not, yeah.
All these economic fictions, like it or not, they exist.
And they do influence, Mark, if I can butt in, they do influence what our friends at the RBA
totally
rates. Whether you think, that's a whole lot of baloney, whatever, it is what they do. So when they sit down, it's one of the important inputs into their decision whether they're going to cut.
Which is why we need you need to listen to Stephen, because maybe you just talk about the Nairu, N-A-I-R-U, quickly where we're at.
The last time they published numbers, which, as you said, was about a year ago, they said it was about 4.25%, 4.5%. 4.5. More near 4.5. So what that meant in everyday terms is that when the unemployment rate got below 4%, 4.5%, sorry. So when it got to 4%, they were thinking, and their little model on an Excel spreadsheet was telling them that would feed into wages growth, that would feed into higher inflation. So therefore, we can't cut interest rates because we fear that the wage price spiral, that the Nairu is the actual unemployment rate is too low for the Nairu, and we're going to have some wage pressures. So that saw them when the US is cutting rates, the Kiwis, the POMs, Europeans, Canada, we're all cutting rates from the middle of last year. We held off until February. We had 125, and some of those central banks were cutting 50 at a time. We had one little 25 in February. They paused in April. I'm wondering whether the election they just didn't want to get involved, which I understand. And the Nairu was one of the reasons that they didn't do it, because they feared that if they cut interest rates, which is stimulatory to the economy, we know that, the unemployment rate went back to 3.7, 3.8. Oh, we've got wage pressures, we've made a mistake. So they've been very, very cautious. And that labour market, the unemployment, the Nairu, has been one of the key reasons why they've been very, very cautious in cutting.
So the Nairu is related to the new part of the mandate, unemployment. So one of the ways of measuring these things is not just looking at the unemployment number as it indicates what full employment looks like, but it's also saying, and what does that mean in terms of what it could do to inflation? So the Nairu is an important piece. Unfortunately, she never talks about it. So
no.
So they never, the page.
Well, once in a year they put something out.
Yeah, but not out on their
research papers.
It's in the research stuff we've
read. Freedom of information. So I know there's a couple of journos who love to sort of do freedom of information requests of the RBA. What's your latest Nairu? And so Shane Wright from the Herald and the Age, he's tenacious, and and I think he's got a couple of little ins to the RBA. And so he occasionally writes something about
I know John Keogh's also.
And John's from the AFR.
Yeah, and he's connected. I mean, sometimes I think they use John Keogh to condition the market. I really do, because he comes out with too many things that get repeated by the Reserve Bank the next day when they do their thing. And certainly Chris Joy, our mate Chris Joy, accused him of that.
And Chris doesn't hold back.
No, he doesn't hold back. As we know. God, So, guys, when you are looking to talk to your clients and you're looking to have something sensible in terms of conversation with your clients, and you need to have some stuff in your hip pocket. I mean, I know this is a commercial conference. It doesn't matter whether it's commercial or residential. It's the same point, because interest rates are interest rates. Yeah. These are, and we've got some more stuff to talk about, but these are two really important things you need to be able to understand the structural reasons around this stuff. So we talked about the inflation number, which gets printed every. Well, we've got a monthly inflation. But I'm more interested. I think she's more interested in the quarterly numbers.
Yes. The monthly number's sort of interesting, but the quarterly one's the one that's got the credibility.
Yeah, so if you want to find out what the quarterly number is, the quarterly number gets printed the month following, about the last week of the month following the quarter. So for the March quarter, the number got printed on the 29th of...
Late April, yeah.
The 29th of April, something like that.
Something like that.
Yeah. The next set of numbers again to get printed won't be until July.
So the June quarter numbers, and we're in the middle, slap bang in the middle of the June quarter right now. So the ABS is running around counting the price of haircuts and...
Tell them how they do it. I'll give us an example of how they do it.
It's really interesting. Yeah, because
this is important.
It's absolutely fascinating. The Bureau of Statistics, who calculate the inflation rate, so we might go to the supermarket and think, oh, gee, the price of baked beans has gone up a lot, and oh, gee, the price of dishwasher tablets has gone up a lot. What the Bureau of Statistics do, they go to the 8 capital cities, the 6 states and 2 territories. Some of this is automated now, of course, they just go online, but they check the price literally of 100,000 items, ranging from a men's haircut to a woman's haircut to shoes to socks to bananas to insurance premium. So what's an insurance premium? For cars, yep. Home, yep. Contents, yep. So it's not just... So you see this insurance premium, well, what is it? So they check, because they go up at different rates. So they go around and survey 100,000 prices each quarter.
Actual field officers.
Yeah, and there's people go out to the shop, literally, yeah, correct. What's the price of, I don't know, wine and beef and lamb and chicken and... onions, whatever. And they put this into some, I haven't seen the spreadsheet, I'd love to see it, but...
You would love to, I'm sure.
And they put all these prices in and hit the calc button and out comes your inflation rate. And it's weighted, this is the other thing, so petrol, and of course that changes every day, so the quarterly is the quarterly average. I think they do that every day in each capital city. So
backwards though.
$1.80, $1.79, $1.88.
But it's a backward number. It's
correct.
It's not extrapolated forward. It's just backwards.
It's just the number for the quarter. So, and the price of petrol, the weighting on the items in the inflation basket is according to how much they do a survey every 5 years, how much we spend on each item. So we spend a lot more on petrol than we do on onions per quarter. $100 a week for petrol, give or take. Might buy a bag of onions every couple of weeks. So if the price of onions goes up a lot for whatever reason, sure, the price of onions has gone up. It's not going to have a big impact on the CPI, on the inflation rate.
Because there's no weighting.
There's weighting, yeah. And so that's where things like dwelling rent have a very high weighting, because a lot of people spend a large part of their income on rent. Gee, of course, don't we just? And things like electricity has a high weighting in the consumer price index. Food, takeaway food, tobacco, alcohol, soft drinks, it's all in there, and they all have a weighting according to how much we spend. So over the last, 20 years, things like alcohol and tobacco have had a lower weighting because we are drinking less. Not last night maybe, but we're drinking less and smoking less. So they're still in the inflation number, but they're less. Things like computers have got a much, much higher weighting. 20 years ago, not many people had a computer. Now we've got bloody phones and laptops and things. So that's got a very high weighting. So the price of your iPhone and your Dell computer and all those things have a very high weighting in the inflation basket.
Because everyone's got one, sort of.
So it's linked to that. So that's how they calculate it.
And they do that.
And they want to get that to between 2 and 3%, the change in those prices, weighted according to the different weights at 2.5% in here. It sounds pretty hard to do, doesn't it, when you put it like that?
So they do, the number you're most interested in will be the quarterly numbers, which come out at the end of the month following the quarter. That's the first thing. Yep. They do monthly numbers, though. Are they doing monthly numbers?
They do, yes, they're doing monthly numbers. They're called experimental.
Yeah. Because I wouldn't put too much impact or emphasis on that. I might get a bit encouraged or discouraged by it, but that's about it. I wouldn't be making financial decisions around those monthly numbers. So they do that, and as we said, Stephen just said a moment ago, is that they're looking for a number between 2 and 3%. In the older period, like going back a period, we used to look for the headline number, okay? We're looking at the headline number. Another small change which the Reserve Bank governor has sort of, the new one, has sort of implemented.
Yeah.
And I mean, it's sort of gone to the coup, and no one's really talked about this, to be honest with you, you and I have, but she looks at what they call, you'll hear the word, the underlying inflation number or the trimmed mean. So she's not that interested because, like, unfortunately, I called him out on it. I called Jim out on it on X, and he got upset. And then that's when they contacted me to come on the show. I said, because he was saying, just as in January.
I saw that Twitter exchange or X exchange.
X exchange. In January,
head to head.
In January, the number came out for the December period, the end of December, and Jim, of course, jumped up on the dais and started saying, look, we brought inflation down, and because the headline number came in 2.4, I think it was, or something like that.
Yeah.
And the trim was 3.25, I think.
3.2, yeah. That's
something
exactly,
like that. And I wrote, Jim, stop taking credit for this. Australians have done that. You've had nothing to do with this. And by the way, the RBA's only interested in trimming, because he then started sort of presenting an argument without actually saying that we're going to get an interest rate reduction. We did get an interest rate reduction, but it doesn't matter. And Jim then got stuck into me, and so the deal started. But we shook hands when he came in for the podcast. But maybe you just explain, because that is, I think it's not a structural change, but it's quite an important difference.
They've put greater emphasis on it.
RBA does.
Because just to get back to the headline figure, that is all of those 110,000 items. It's just the rate of inflation. So if the price of lettuces do go up because of a flood, that's part of your inflation rate. So the trimmed mean that Mark's talking about, or the underlying inflation rate, is designed to take out the things that have a very large but probably one-off increase in price or decrease in price. So when lettuces are growing again, they go from $10 back to $3. That's going to be, next quarter is going to be negative. So they trim those things out. Well, another thing that is often trimmed out is things like tobacco, because of course the excise on tobacco is amazing. So you're not going to hike interest rates because the government's putting an extra excise on tobacco, are you? Because it's a health issue. Sure, it's a cost of living, but it's not your underlying inflation rate. And they try to get that underlying or trimmed mean inflation rate as a measure of demand and then pricing pressures in the economy. So if demand's running hot and everybody's putting up their prices because they're being run off their feet with people coming into their shop or whatever it is, and you're putting up your price and think, I can put up my prices and get away with it this time. That's what they're guarding against, rather than a conflict in the Middle East putting up or downward pressure on oil prices, or, as I said, or the other one that they've trimmed out the last couple of quarters is the electricity rebate. How we've got the $75 a quarter from the government as a cost of living relief on our electricity bills. That's not inflation. Sure, it's a lower cost of living. Yep, we're saving $75 a quarter, but it's not your true inflation rate, because when that subsidy ends at the end of this year, I think it is, it'll jump back up. We'll pay whatever that price is for.
Which potentially means that
So you trim out things that are either temporary or one-off or not really driving your true inflation, your underlying inflation measure.
So when the ABS puts out its numbers, its next set of numbers, which will be in late July.
End of July, yeah.
When you see, it'll give you the headline inflation at the top, but just keep scrolling down. It's about 50 lines down. Yeah. They'll start to talk about the trim mean. They do the calculation for you and they tell you what the number is. And again, you are looking for a trim mean that has got a 2 in front of it, and hopefully closer to 2.5 than 3. So, and that's the sort of thing that will encourage the RBA to maybe look at putting interest rates down again. So so you've got the unemployment number. You know what the Nauru is now. The unemployment number as up there, neck and neck with the CPI number. We now know where the CPI number is. Now know where to find it. The third thing he's got a reasonable list, but we're just going to go the third one is on your list.
GDP, economic growth.
Which is what we talked about right at the beginning.
We sort of did with the private and public and the composition of GDP growth. So,
what's the number they're looking for?
Again, they don't put their hand on their chest.
What is the budget? What is the budget bake in?
2.75
so
GDP.
That's pretty important, because
it is. And we want as Mark and I've said many times, not just today, but in years gone by, we want a growing economy. It's a good thing to have economic growth because it means that we're creating jobs, we're creating improvement in living standards. We want it to grow.
And what's the long-term number for us? What has it been?
It is slowing down a bit. Back in the day, it used to be about 3.25. Yep. Then it went to about 3. The budget numbers which came out in March were about 2.75. So that was a little bit of a sneaky thing that was slipped into the budget. Because you and I used to think it was 3.
Yep.
And
well, it was 3.
It was, yes. I think, and the RBA will be saying it's about 2.75. And that's GDP growth. So that's the combination or the addition of consumption, private sector and government, investment, exports minus imports. So if that real growth in the economy is 2.75 per annum, yeah, that's pretty good. And of course, just to sort of put this into context, when we get negative GDP, so output's falling, that's a recession, for 2 quarters. And that's what we don't want. Oh, heaven forbid, no, we don't want recessions. They're horrible.
So they're the 3 main things.
You want to grow your economy.
And then that also gets put up by the ABS. By the way, yes. The RBA does not see the numbers before all of us.
No.
The numbers are available to us on the same day, at the same minute. Nobody gets to see it except, the people in the ABS will get to see it, but I'm just saying, generally speaking, they're all sworn to secrecy, etc. Yes. But nobody really knows the numbers. So we all see the number at the same moment that the RBA sees the number. Then the RBA has their meeting, and then they make a decision on interest rates. If I could just turn all this around, so I think that's a pretty good coverage of where we're at. We know what the money markets are saying. The money markets are saying 2 to 3 rate reductions this year sometime. We'll see what happens. And there's no point us looking at May because, right now, what do you think the indicators are?
It's done. Look, it's
a rate reduction.
The rate reduction's there, and the inflation, a couple of things, Mark, just to
close
30 seconds.
Yeah.
There'll be a rate cut in May, probably 25, or almost certainly 25.
It's 17th or 18th of May.
It's the 20th. It's the 20th
of May.
2:30 p.m, look at rba.gov.au. 2:30 in 1 second. Beep, beep, beep. There's the number. 25-point rate cut. The inflation number which came out, what was that, about 2 weeks ago now, was 2.4. The trimmed mean, so here you go, came in at 2.9, and the run rate was converging to 2.5. So that's what the RBA will be happy about. So they'll be a little bit cautious. So 25, and they'll use all the nice words to say, we're still worried about the outlook. And the unemployment number was just a little bit weaker. It wasn't bad, as we've discussed with Nehru and all the rest of it. It was just a little bit weaker, and things like job vacancies, job ads, the Seek Job Ads series, is just tilting down. So it's saying that demand for labour is slowing down. Maybe the unemployment rate will be skewed up. The RBA will be ahead, trying to head it off at the pass from getting too high.
I think I should just as we were speaking, there was just one more slight change that the RBA is now doing that they haven't really done in the past, or at least I don't think so. Or have as much weight on it. In the past, when they look at inflation, they look at, or CPI number, to say, where are we at with CPI? They've looked at the inflation rate that the ABS has given us for the quarter and also the 12 months before that. So that'll be the quarter's just passed and every quarter before that, and they add it all up and they say there's 1 year's worth inflation. 2.4. It's 2.4, okay?
Headline. Yep.
Headline, and it might be 2.9 trimmed.
Yep.
What the RBA's just been doing a little bit more of lately, which I've never really known.
I know where you're going.
They've never really done it before, but they did it for the February meeting. Now, I don't know whether this is... But so...
Yeah.
If you looked at... A lot of people are saying, and, Warren Hogan is a good example.
Yeah.
A lot, Chris Joy, a lot of... Yep. And a lot were saying... For the February the 18th meeting, 17th and 18th meeting, the announcement was on the 18th, they were saying there's no way we should be getting a rate reduction, take politics out, all that sort of stuff, but there's no way we should get a rate reduction because if you look at the inflation number for the December quarter and every quarter before that, it's out of range. It's out of the 2 to 3%. And you should not...
3.2, the trimmed mean.
Yeah, and you should not get a rate reduction because of it, because it's not in the band. Maybe you could explain to everybody what she did to justify. I don't know if she did it to justify the rate reduction, or
I'll try.
Or did it because it was 0.5
for the quarter. For the quarter. I'll try to remember what the actual inflation numbers were.
It was 0.5.
But to get an annual figure of 3.2.
Yep.
In the year to December, so
last year.
You need the 4 quarters. So 1%. In the March quarter, 1% in the June quarter, 0.7 in the September quarter, 0.5 in the December quarter, annualised 3.2, right?
In which case you would not have a reduction.
Correct, if you looked at the 3.2. However, underlined, however, if you look at the last 2 quarters, the 0.7 and the 0.5, and remembering that that annual figure is made up of the March quarter 2024, that's ancient history.
Because we've had high interest rates for a long time.
Because of it, yes. So so what the RBA did in February when they announced the rate.
I've never heard them do this before, but anyway.
They said the 0.5 for a quarter, annualise that, it's easy to do, just multiply it by 4 basically, it's 2%. And when we get the subsequent quarters, those 1% will drop out of your run rate. You know, you're moving along, you eliminate the last one, you add the new one. Eliminate the last one, add the new one. And that's how you get your year-on-year price change. So we know that the one did drop out when we got the March quarter numbers 10 days ago, and it was replaced with a 0.7. So we went from 3.2 to 2.9. Next quarter, we've got another 1.0 dropping
so
out.
The June quarter,
just say we get a 0.7 for the June quarter. And I must confess, I don't know what it will.
But Steve's saying the June quarter for 2024 will drop out.
Correct, at the end of July.
And it's a 1.
And it's a 1.0. So just say we get a 0.7 again, you know, whatever. So that 2.9 all of a sudden becomes 2.6 without any magic. If we get a 0.5 for the quarter, we get 2.4, you know, because the 1 is dropping out of your run rate.
But they've never done that in the past. So they're
No, it's been...
it's quite quizzical, and only a few sort of people picked it up.
Yeah,
because we couldn't really but work it out, and but she kept.
But in her press conference,
she kept talking about the 0.5
announcement.
She sort of surprised the market, I think.
Yes, and it was also to do with the thing about the RBA. And you and I have learnt this over goodness knows how many years. It's what they do is important. Obviously, we cut rates, we hike them, we keep them steady. And now with the press conference, which I love, by the way, I think that's a really good initiative. So the governor does give a press conference after every interest rate announcement. It's a chance for her to explain. So what she says is just as important as what she does.
So we don't have to interpret it as hard.
Yes, and the quality of journalists now is quite good, you know, genuinely. So you're getting John Keogh there and Stutchbury's there and the Bloomberg journos are there, and they're all asking really good questions. And she answers them honestly. I think she genuinely does. It's not sort of like this, I'm the RBA governor and I'm a bit too precious. I think she's fantastic, by the way. So in that roughly an hour-long press conference, she'll be grilled on, well, why did you cut? Why didn't you? Why didn't you do more? What are you doing next month? Tell us about Mayru or something. You know, so they ask her lots of questions, and that is really enlightening in setting the framework for how we economists think about the next month or two. Because if she says, we cut rates and, look, we're happy to do it because interest rates were really oppressive, we're still not sure whether inflation's going to be coming down, but we thought we'd take like an insurance rate cut and it's not, blah, 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 blah. Okay, so they're still cautious, and lo and behold, come the April meeting, they didn't cut. So she sort of signalled in her comments that, here's one, we'll just sit back for a few weeks. Coming up to May, we'll probably cut. And then what she says will be just as important as what she does on the 20th of May.
And what she did what she's doing in the May decision is off the back of the April 29th numbers, which she didn't have in the last meeting. So
correct.
All she had was the previous month's, the previous quarter information. So I think that's fair. I think two pressing things we need to talk about. One of which we need to talk about is geopolitical stuff. So, the big things in the world today. One of the big things in the world today is geopolitics. Another one is AI. But AI does go. I'm not going to talk about AI. That goes to productivity to some extent, to a large extent, and it is a bit of a scary topic. But it's too much speculation. So, relative to how it affects house prices and interest rates, I don't think we'll get into that today. But geopolitics is an issue. We've seen what happened when Russia first invaded Ukraine. We saw the price of a lot of things just escalate. We now have India and Pakistan going hard at it, which you probably guys have caught up with. What do you see, and geopolitically we have Trump with his tariffs, another geopolitical. So we are living in an era of geopolitical change, and the geopolitics puts pressure on everything everywhere, not just Australia, but the whole world. Because we are a global economy, we just don't operate on our own. So what do you think about the geopolitics, Steve? Where do you think what do you think the RBA's, because they always mention it.
They do mention it, yes.
What do you think the RBA be thinking about what's going on in, for example,
And in
Pakistan?
China, Taiwan.
China, Taiwan.
Goodness knows how that gets resolved, And this is not a forecast
And
on how...
of course, Middle East as well.
Oh, yes, the lingering thing in Israel...
And Gaza.
Gaza, whatever. There's all this sort of stuff. So there's these little things, they're big things. The effect of these things, and the Trump tariffs and the retaliation from the Chinese against them, and even though they're negotiating, and who knows where it ends? No one does. I don't even think Mr. Trump knows where it's going to end. But we do know, one thing that we do know about these things is that they're very unsettling for the business community. And you think about it, if you're a business person and you're exporting to the US, or you're importing from China, or you've got some trade agreements into India, or you're heavily reliant on energy, the oil price, which by the way is really low at the moment, which is something. You don't necessarily change your behaviour because I'm not quite sure what Trump and China are going to do with tariffs, but you sort of think, well, if it turns out to be really nasty, my really good business plan that I've got to export into the US and import goods from China, that could be thrown off course. And just think back to COVID. Now, I don't think, and touch wood, they're not as big as COVID, but a lot of businesses that had great plans went belly up because of bloody COVID coming along and closing their businesses down, unfortunately. So these geopolitical things are just generating uncertainty, and they generate. And Australia is very dependent on the export sector. Now, this is something that, again, God, I love my numbers. Do you know that a quarter of Australia's economic output is linked to international trade? It's actually 4 times bigger than housing construction. So what happens in the global economy is really important to us. It really is. And it's not just the iron ore price. Yes, that's really important, or the coal price. It is things like education services. It is like things like tourism. Foreign tourists coming to a place like this, who wouldn't?
So people should understand the room that education is our 3rd largest exporter.
It's huge, yes. And while there are issues there with population and inflows of people, whatever, it's still a really big export earner. So if we have problems in the international economy, so this conflict, either the military conflict or trade conflict, if we can call it that, causes the global economy to weaken, all of it, and particularly China, so China's probably arguably the biggest soft spot for us, because 1/3 of all our exports go to China. So if China has a bit of an extended period of economic weakness, then we have a period of economic weakness. So this is this issue about the tariffs. So I can just sort of focus on that for 60 seconds. We don't export a lot to the US. We don't have a big trade place. So the tariffs on the Australian industry, while the specific companies and businesses will be impacted, at the macroeconomy level, it's not a huge...
It's 5% of our exports.
Yes, it's not big. Whereas 33% of our exports go to China, and this is where it happens. So if the US and China, 145% tariffs, and no, we're not going to sell you our cars, and all this other conflict goes on, the Chinese economy weakens. Yep, it does weaken because it's not exporting its stuff to the US. Therefore, China will say to the Australian producers, mate, we don't need as much iron ore as we used to. Oh, we can't, we've got a weak economy, so we're not sending as many tourists down to Australia for a holiday. We're hunkering down. They have a weak economy. And so Australia suffers on the back of a weak Chinese economy, not necessarily directly due to the tariffs.
And that, we go back to the beginning, that affects productivity, GDP, because the calculation of GDP is X minus M, which is exports minus imports. If our exports come down, then our GDP number comes down.
Correct.
If our GDP number starts to shift away from the 2% or the 2.75%, which is the RBA like to see,
1.5.
Goes 1.5, 1. The RBA is going to say, whoa, when you go down through Stephen's checklist, inflation, unemployment, then you see GDP is minus. The RBA does, because part of the RBA's job, the very original mandate outside of inflation is 2 things. It's prosperity and welfare. So their job is to look after the prosperity and welfare of all Australians. Prosperity means growth. One way you measure prosperity, growth. Yeah. And welfare means make sure people don't get badly affected by inflation, for example. So there is no cohort of society who's suffering under inflation or the cost of living. So that's their actual written into the legislation.
It is. It's in RBA Act 1959.
Prosperity and welfare.
Those interesting.
So we measure prosperity by, one of the measures of prosperity is GDP.
Yep.
So if they say, well, GDP is negative, Australia's not being prosperous. If we're not prosperous, we have to reduce interest rates. And the thing that one of the things that's been holding us up for a long time, apart from government expenditure on the GDP formula, has been the excess of exports over imports.
Yeah.
China being our biggest exporter.
We're running it, and this is the other thing that, again, I'm old enough to remember Paul Keating and Banana Republic days.
Me too.
A lot of you are so young, you probably remember. But we had a real bad export problem back in the mid-'80s, I think that was. For the last, I'll have to check my year, but for many years, we're running an international trade surplus now. Yeah, like Australia's an export powerhouse. It might sound funny, because we think, housing and household consumption. Okay, it is mainly resources, which is fine, iron ore and coal and gas and whatnot. But we are exporting way more than we import. And for us, I won't say it's free money, but we're lucky or fortuitous, or we have a good corporate sector that is able to tap that part of our fortune in having lots of resources in the ground, exporting to a country that wants to pay us a lot of money for them and buy millions of tonnes of this stuff, and so we get the benefit from that.
And what's his name from Westpac, our mate, Bill
Evans. Good old Bill, yeah.
Bill Evans used to use he's retired now, but Bill, one of the greatest banking economists for a long time.
Yep.
Bill used to refer to this as the mining prosperity dividend for all Australians.
Yes.
It actually has kept us our head above water during the GFC. It has pretty much maintained us for the whole period. So this is decades, we can't put too fine a point on this. So Stephen's point about the tariff war, not relative to us individually as an organisation, as a country rather, exporting to America, but the effect on China. So if Trump has the ability to achieve what looks like to be his outcome to weaken China, then that will cause us a problem in relation to GDP. GDP then will go down, and just to go back, we're probably going to see a period of interest rate, not necessarily reductions, but not going up.
So,
That's sort of where we're at. So,
and that's where the Aussie dollar gets hit hard. I know we're not necessarily focusing on the Aussie dollar here, but it'd probably get crunched if we have that sort of scenario.
Yeah, and the Aussie dollar, by the way, is an important part of what the RBA looks at, but we're not going to. I guess we don't have time to get into that today, Steve. So just where we are at today, and by the way, economists don't know what's going to happen in the future. They can just say, based on what's in front of me today, what do you see the next 12 months look like?
Look, I'm cautiously optimistic. I'll preface that by saying that I do think the RBA will deliver those rate cuts that are priced in. We're going to be seeing a number, 3, 4, I'm going into the early part of 2026 too, so not necessarily ending on December, but we're going to see a series of rate cuts. Interest rates are still restrictive on the economy. They're still causing people financial stress. That cost of living issue, okay, so inflation's fallen, but the cost of living issue is now on mortgage serviceability.
But the cost of living hasn't gone down though.
It hasn't gone down, it's just stopped getting worse.
Yes.
Or whatever it is.
It's still expensive.
Oh, hell yes. But, so it's predicated. So when the RBA cut rates, and we saw it in the February rate cut, so we had one rate cut, consumer sentiment, whoosh, went straight up. So consumers, again, as I said before, we're not stupid. Consumers are aware of what's going on. So if we get a cut in May, then say one in July, then maybe one in September, just assuming we get 3 cuts, I reckon by the end of this year, not only will be there the proverbial sigh of relief, there'll actually be a cash flow relief. The first 25 points, it's handy, but it doesn't change my life. Second one, it's a bit better. By the time you get 3 or 4 cuts into your repayment schedule, and okay, a lot of people probably keep their repayments high, but they're not going to have to increase them. And some of them might say, well, gee, I've had such a crap couple of years, I'm going to reduce my repayments and take that extra money out of my monthly repayments. So you get this whole scenario where that's predicated on that. The other thing that I think is important about the economic outlook is that I think inflation is under control. I think that was, I won't say an old story because it's still very recent, but I think that we have moved to a period where we are going to be seeing those inflation, trimmed mean and headline, 2 point something. So the RBA will be thinking, thank goodness we've got 2 point something on the inflation rate. That means that we can afford to trim rates, that we certainly don't have to hike them. We're keeping an eagle eye on what's happening in geopolitics and around the world, and China and the US and all the rest of it. And so they don't want to hike rates into that sort of scenario, of course. And that with the election out of the way and a majority government, which I think is good, so whoever won, I'm glad we don't have independents and Greens holding the balance of power. So I think everybody agrees, well, most people agree with that.
Even John Howard agree with that.
Yeah, the Libs here. So we don't want, I prefer a Labor win than a minority, because the minority blocks everything in the bloody parliament. So that's, and I think...
So politically we're stable.
We're stable, that's the critical thing. And I think to give Jim Chalmers a bit of a tick, he is thinking about productivity.
Yeah.
He is thinking about the right things. Now, the proof will be in the pudding. You know, the election's only, 4 days ago, so let's give him a moment to find out what's happening. But if he's true to his word and they do implement a series of these sorts of reforms on infrastructure spending, on skills and training so that we don't have a skill shortage in Australia, if he looks at some tax reform, and I know that's a thorny issue and it takes ages to implement, and you know, there are vested interests in any tax reform debate, but you know, again, it's amazing how much tax reform you can achieve over a beer. You know, we had a good discussion last night, and we reformed the tax system wherever you, I can't see you in the crowd, but anyway, a few of us had a good conversation. You know, so I'm hoping, they're sworn off the grog in Parliament. So if they're around their cup of tea, if they can have a conversation about what tax reform, bring it to the people, explain, this is why we're doing this and this and this with the tax system, to improve the efficiency of the tax system. Now, there might be a few people who lose out. Sorry, you know, that's the nature of tax reform. A few people will benefit. But for the economy, if they can deliver that, the RBA trims interest rates, the geopolitics doesn't get uglier than it currently is. If we sort of somehow find that that conflict in India and Pakistan is just a skirmish and no more, touch wood, and Trump backtracks and Chinese backtrack and, you know, whatever goes on there, there's a hint of optimism coming through. And we consumers, we've had it tough for so long that, you know, we saw it during the COVID pandemic. As soon as we got let out, whoosh, up with the economy. So now we've got this interest rate pressure and all these other things. If we do get a bit of relief on cost of living and those rate cuts coming through, yeah, I'm not saying we're going to have a, you know, almighty boom in the economy, but we should do okay. And in that too, the housing cycle's going to be okay as well.
So thanks, Stephen. One final thing, all you guys, this is a commercial conference, by the way, and just remember one thing. If the Labor Party is going to push their environmental policy, like big time, EVs and all those sorts of things. So, you know, anybody who, we've got our funders here today, anybody who's funding EVs and when it comes to anything that's electric, this is the sort of stuff you've got to start thinking about in terms of diversification of your business. You've got to be doing more commercial.
Batteries?
You know, anything to do with this stuff. So anything where there is funding available through our funding partners that are here, lending partners, that's the stuff that you've got to start to concentrate on. And my gut feeling is, I read a report today from Livewire.
Oh, yeah.
And livewire.com. It's not a bad place to go to.
Very good. No.
Livewire.com.au, I think it is .au, but it's LIVEWIRE. They have a lot of economists, people there talk about, you know, they talk today, I look at it every day, but they talk today about where are the opportunities. And they actually said someone like Pepper, and, you know, obviously Pepper in commercial I'm talking about, but they're talking about, you know, people who, and of course, you know, all of the lending partners here fund cars, you know, and Platform does a lot of it, all the banks, everybody. But they're sort of giving ratings to these sorts of organisations, but at the end of the day, these organisations only do well if brokers do well, and it's brokers who find the clients. So start to diversify your business. Start to think to yourself, okay, maybe I'm happy, I'm unhappy with the outcome, the outcome, it's irrelevant. You just have to, you know, Stephen's given us a great summary of the economy today, fiction as it is, but it doesn't matter, it's what we've got to live with. And Labor, Liberal, that's all fictional too, by the way, so that's equally bullshit. But nonetheless, that's what we've got. We've got governments, and governments, we have to have governments, because otherwise if we don't, we'll have anarchy. Governments are here to govern, and they won by mandate, so, and we are stable. Yeah. So you've got to look where your opportunities are. And just look at what their policies are and say, how can I make money out of that? And commercial conferences is a great example of that, and that's what our lenders will be doing. They'd all be sitting in there, you know, they'd have all their PhDs sitting there trying to work out where are the opportunities, well, this is, you know, your PhD opportunity here today. You're listening to people, and we need to, you know, we need to take advantage. You need to take advantage of those situations as we do, but you need to take advantage of those situations. Think it through. What's going to be a big issue? I don't care about the politics. What's a big issue that this government's going to implement? And by the way, they're probably going to be for 6 years. You know, I can't see Liberals getting back in a hurry,
No.
or anything else happening. So they'll be here for 6 years at least. So that's enough time to implement everything to 2032. That's their big date. So you know what the big calls are. How do you get a piece of that?
Yep.
That's the deal. How do I get a piece of it? Knowing what Stephen just explained here. Ladies and gentlemen, please put your hands together. Thank Stephen Koukoulas.
Thanks, Mark. Cheers, mate.